Welcome to this explainer. Look, if you've been feeling the pinch of rising costs lately, and let's be honest, who hasn't, you are absolutely not alone. Today, we are unpacking a deeply frustrating reality that affects millions of people across the country. And it's this. There are actually 5 specific bills that a huge number of seniors are needlessly paying right now, today, in 2026. Now, I really want to be clear right out of the gate here. We are not talking about sketchy loopholes. We're not talking about weird legal gray areas or playing games with the system. We are talking about explicit, black and white, legally mandated exemptions. The law actually says you do not have to pay this money, period. Yet millions of people are still paying them every single month, literally just handing their money over. Why is that? Well, it's because the agencies collecting the cash, they're not going to raise their hands and stop it for you. We're going to break down exactly what these 5 exemptions are, the math behind them, and most importantly, how you can stop these unnecessary payments in their tracks starting today. Let's get right to it. Okay, let's dive into this. I want you to consider this core reality because it's going to reframe how you look at every bill you get. The money keeps leaving your account every month because the whole system is built so that you have to ask first. That right there, that is the absolute secret to understanding bureaucratic drain. It has absolutely nothing to do with whether or not you actually qualify for these exemptions. You could be the most qualified person on earth. It is entirely about the fact that no agency is going to proactively send you a letter in the mail. Nobody down at the county office or the federal government is going to pick up the phone, call you and say, hey, we notice you're overpaying, let's get that fixed. It just doesn't work that way. The machinery just hums along on autopilot, executing its original instructions month after month, year after year, quietly draining your resources, unless you step in and interrupt the process. It's like a leaky bucket that nobody tells you is leaking until you point it out yourself. So I really want you to ask yourself this question right now and think about it as we go through this. Are you paying bills you are legally exempt from? Because based on the data, the odds are incredibly high that at least one, if not more, of the 5 areas we're about to cover applies directly to your financial situation. Remember, we are talking about legal exemptions here. The law says you do not owe this money. But the catch, the big catch, is that no one is going to call you to offer a refund and no one is going to automatically adjust your account in the background. You have to initiate the change. You have to be the one to raise your hand and say, hold on, I don't owe that. To help you do exactly that, here is our roadmap for today. Number 1, the silent money drain. Number 2, federal tax overpayments. Number 3, lowering Medicare costs. Number 4, slashing property taxes. And finally, number 5, your action plan. Starting with Section 1, the silent money drain. Why nobody calls you. Moving right along to Section 2, federal tax overpayments, the IRS leaks. To really understand why nobody calls you, you have to realize that government agencies simply do not communicate with each other in real time to save you money. They just don't. Let's start with the federal level and the money coming straight out of your Social Security check. If you're having federal income tax withheld from your monthly payment right now, it is almost certainly because you filled out a Form W-4V at some point in the past and chose a flat percentage rate. Usually people pick 7%, 10%, 12%, or 22%. And then what happens? The Social Security Administration just blindly applies that rate every single month, forever. But you have to ask yourself, is your Social Security actually taxable anymore? To find out, you need to calculate what the IRS calls your provisional income. It sounds complicated, but it's really not. Here's how you do it. You add up all your income outside of Social Security. So a pension, maybe some IRA withdrawals, part-time work, dividends from investments. Take all of that and then add exactly 50% of your annual Social Security benefit. That's your provisional income. Now, if that total number is below $25,000 as a single filer, your benefits are not federally taxable. Zero. For a married couple filing jointly, that threshold goes up to $32,000. If you are below those numbers, every single dollar of withholding coming out of your check is just a prepayment of a tax you literally do not owe. It's madness. To fix this, you don't just wait. You must download a new Form W-4V from irs.gov. Select 0% and mail it to your local Social Security office. Notice I said Social Security office, not the IRS. It usually takes them about 30 to 60 days to process it, but once they do, you stop the drain and keep your full check. Now let's look at the sheer scale of some new relief that is available right now. There was a brand new bill signed that took effect for 2025. It created a highly powerful senior-specific tax deduction. And what's amazing about this is that it stacks directly on top of your existing standard deduction, and it stacks on top of the existing age add-on for being over 65. It's cumulative. If you're 65 or older by the very last day of the tax year, you can legally deduct an additional $6,000 from your taxable income. And if you are a married couple where both spouses are 65 or older, you each get your own $6,000. That means a massive $12,000 total deduction for the household. This isn't split between you, it's cumulative. That is $12,000 of income completely shielded from federal taxes. To get this, it is claimed on a brand new form called Schedule 1A. But here is the massive danger with this new deduction: software updates. I literally cannot stress this enough. Many tax preparers who haven't fully updated their workflow for the newest tax law changes are missing this entirely. If you use off-the-shelf tax software at home that hasn't run its absolute latest update, it's missing it too. It's just not pulling the Schedule 1A. So if someone else prepares your taxes, whether it's a family member or a paid CPA, I highly urge you to use this exact script before you let them hit the submit button. Did you apply the new senior deduction, the $6,000 or $12,000 if we're both over 65? Make them look you in the eye and answer you directly. Don't assume they did it. Now keep in mind, this powerful deduction does phase out gradually if your overall income is higher, specifically above $75,000 for singles or $150,000 for couples. But you really must act fast on this because this specific piece of legislation actually expires in 2028, unless Congress gets around to extending it. The window is wide open right now, so please do not let it close on you without claiming what's yours. Let's move to Section 3, lowering Medicare costs, reclaiming $2,290 monthly. Okay, so every single month, a standard Medicare Part B premium of $2,290 is deducted right out of your check before you even see a dime of it. It just vanishes. But for millions of seniors, that money legally does not have to come out at all. The Medicare Savings Programs are specifically tiered to step in and pay your premiums for you. The most comprehensive tier is the Qualified Medicare Beneficiary Program, or QMB. If you get QMB, it pays your Part B premium, your Part A premiums if you have them, your deductibles, and your copays. It brings your out-of-pocket medical costs to essentially zero. The baseline income limits for this are $1,350 a month for singles and $1,824 for couples. But wait, here's the secret math that trips absolutely everyone up and why people don't apply. The system legally excludes the first $20 of most of your monthly income. They just pretend it doesn't exist. Even better, if you work a little part-time job, the first $65 of those earnings are completely ignored in the calculation. This means your actual real-world gross income can be notably higher than those baseline numbers on the chart, and you could still easily qualify. And look, if you make a bit more than the QMB limits, don't worry. The Specified Low-Income Medicare Beneficiary, or SLMB, and the Qualifying Individual, or QI tiers have higher limits and will still cover that Part B premium completely. Plus, and this is huge, all three of these programs automatically enroll you in something called Extra Help for Prescription Drugs. That caps your medications at just $5.10 for generics and $12.65 for name brands. Independent estimates right now show that several million people are totally eligible for this relief, but they never signed up, simply because they never knew to ask. They just assumed they made too much. Please, don't be one of them. Here's what you do. Call 1-800-MEDICARE. That's 1-800-633-4227. When you finally get a live agent on the line, read this exact sentence to them. I want to apply for a Medicare Savings Program. I think I may qualify to have my Part B premium paid. That specific phrasing officially triggers the process on their end. Oh, and there is a critical new rule change you need to know about that started in April of 2026. Listen to this. If you financially support adult children or maybe grandchildren who are living under your roof, they now officially count toward your household size. Why does that matter? Because a larger household size automatically means a higher income limit to qualify, meaning you might easily qualify today, even if you are flat out denied just last year.
Now, on the flip side, there is another massive Medicare trap, but this one is for those at a higher income level. It's known as the IRMAA surcharge. IRMAA stands for Income-Related Monthly Adjustment Amount, and it is nasty. This surcharge can add anywhere from an extra $70 to over $400 a month to your premium. It's a huge hit, but here is the massive flaw in their whole system. Medicare uses your tax return from 2 full years prior to set your current premium. So your 2026 premium is unfairly based on whatever your income was way back in 2024. But what if 2024 was just a weird, unusually high year for you? Well, the good news is there are exact, recognized, life-changing events that trigger a legal recalculation. If you sold a house, if you took a big lump sum withdrawal from your IRA, if you tragically lost a spouse, or if you finally retired and your income predictably dropped, Medicare is currently penalizing you for money you no longer make. They're looking at the ghost of your past income.
You absolutely do not need to accept that inflated premium. And let me tell you, you absolutely do not need to hire an expensive attorney to fix it. People think they do, but you don't. Here's the straightforward step-by-step process. First, identify which life-changing event applies to you. Second, gather your proof. This could be a final pay stub from your old job, real estate closing documents from when you sold the house, or a formal retirement letter from HR. Third, download and file the completely free Form SSA 44 with Social Security. It is literally just one page. It's not a novel. You simply use it to explain that an event permanently reduced your income since the tax year Medicare is looking at. And finally, you submit it to request the premium recalculation. You can get the ball rolling on this just by calling Social Security at 1-800-772-1213. All right, let's look at Section 4, slashing property taxes. Local government exemptions. So we've talked about federal taxes and Medicare, but let's bring it closer to home. Every single state in the U.S. offers some form of property tax relief for homeowners 65 and older. But ma'am, they all handle it so differently. It's actually a fascinating comparison across the country. Take Texas, for example. In Texas, seniors get an additional outright exemption on their home's value, plus, and this is the kicker, a total freeze on the school tax portion of their bill. So that portion literally stops climbing, even as your younger neighbor's taxes are skyrocketing. Compare that to New York, which recently expanded local authority to slash a senior's assessed home value by up to 65%. Imagine cutting the taxable value of your home by more than half. Other states like Florida offer really significant reductions specifically for long-term residents who have lived there for years. And places like Oregon, Minnesota, and Massachusetts, they offer incredible deferral programs. A deferral means you pay absolutely nothing while you live in the home. The state essentially puts a lien on it, and the taxes are settled out of the estate way down the line. You get to stay in your home without the burden of the annual tax bill. But here is the recurring nightmare we keep talking about. Your county assessor knows your exact age. It's public record. Yet, they will never, ever automatically apply these local exemptions or freezes for you. You have to demand it. So here is your homework. Look at your latest property tax bill. Find the phone number for the county assessor's office, call them up, and read them this exact script. What senior property tax exemptions, freezes, or credits am I eligible for, and what is the deadline to apply for next year? Now, that deadline part of the question, that is absolutely crucial. In most states, the filing window opens right at the start of the year, in January, and it strictly closes around April 1st or May 1st. If you call on May 2nd, they will say, sorry. If you miss that narrow window, you lose the entire year of savings with zero chance of recovery. They don't do retroactive refunds for missed deadlines. So make the call today, find out what you qualify for, and write that deadline on your calendar in big red marker. Which brings us to our final section, Section 5, your action plan. Take back control. We have covered a tremendous amount of ground today, right? We went through the IRS, we navigated Medicare, we tackled your local county assessor, and the single most important takeaway from all of this is that self-advocacy is the only way you win in this system. You have to be the squeaky wheel. So here is your rapid recap of the 5 actionable steps. Number 1, calculate your provisional income, and if you are below the thresholds, file Form W-4V immediately to stop the automatic Social Security tax withholding. Number 2, demand. Don't ask, demand that your tax preparer claims the new 2025 senior deduction on Schedule 1A before it expires in 2028. Number 3, call 1-800-MEDICARE and apply for a Medicare Savings Program to cover your Part B premiums, especially if your household size just changed. Number 4, call your county assessor to lock in your local property tax exemptions, deferrals, and freezes before the spring deadlines. And finally, number 5, if you had a life-changing event that lowered your income, file Form SSA 44 to eliminate that incredibly unfair IRMAA surcharge. I want to reassure you one more time, absolutely none of these steps require a fancy attorney, and not a single one of these forms cost a penny to file. So the crucial point I want to leave you with is this. Knowledge without execution is just trivia. It's just interesting facts. You now have the exact numbers, you have the specific form names, and you even have the literal word-for-word scripts to use on the phone. This money is legally yours to keep. The law is on your side. But it will continue to drain from your accounts month after month until you decide to raise your hand and say stop. So my question to you is, which of these 5 agencies will you call today to stop the automatic drain on your finances? Don't wait for a letter that is never, ever going to come. Pick one of these steps, make the call today, and take back control of your money. You've got this.